Excuse me. There you go. 3 candle box on the daily on a Sunday, signaling you. Ethereum on the 3 candle box daily. 3 candle box. 3 candle box didn't complete. The last one is your make it or break it, and made it. Market reversed. That's how these 3 candle boxes work. You either complete it, close inside, halfway inside, third one closes inside, still active. Next one continues, then either reverses or ends up completing the pattern. So that's why these 3 candles are important, especially when they're underneath the 50 Fibonacci, and it normally happens on the weekend. On the weekend. You have your Friday, ended up Friday, and bam, bam, bam. So we could have something like that forming, but so let me start off. So we're gonna start off with the S&P 500 monthly. All right, this is your S&P 500 time and date, Arizona time. So something that I was paying attention to the S&P 500. We were all paying attention to rate cuts. Kind of like when the government, we had the government shutdown, and every weekend, towards the week or whatnot, you would hear, are they gonna open the government? Are they gonna open the government? This weekend. I remember last time, or not this last time, but prior to the last time, we were so used to of them closing the government, and then over the weekend they'll talk about it. So normally it'll take like a week or so. So we were used to that last time, and we were used to them doing this time. This time, when Trump mentioned about government shutdown, and he said how this government shutdown would actually be beneficial for them, then that's when I said, oh, they're not gonna open the government soon. They're gonna extend the government. They're gonna extend the government shutdown. Um, and then just so happens that Trump came. There's that week. Trump came. The market was excited as fuck. We went back. We went back to the new all-time highs. October 23rd. We were happy. Are we gonna create a new all-time high? Data was coming out next week. And then at the end, our buddy says, you know what, you guys, we're probably going to open the government. We're probably going to open the government this week. And what do you know? Over the weekend, they make an agreement. The government opens. No time high. But I was telling the homie, we have a whole month of data being released once this government opens. You think that whole month we had good data? Think about in a regular month how many bad data, labor data, whatnot, we get bad. So you think they're gonna have to be careful where to place these datas, because if you release a whole shit in one bang, if you place your worst cards as the market is opening and they hit just back to back to back bad data from October, the market's gonna fucking the market was gonna fucking sink. So they gotta be careful where to play these cards. After the Fed, before the Fed. Why didn't they play this data that the Fed need to get to make a better analysis of what they need to do, instead of having the CPI data fucking a week after the Fed comes out? So it doesn't fucking make sense to me. So when I told the homie the market was gonna open, be careful, because we're probably gonna fucking start getting bad data and the market was gonna start going back down. Now look how they're doing this shit. We just had another fucking another zone. Another new we dipped, right? We had this horrible dip. Oh no, biggest crash. We're gonna go down. Is this it for the all-time high? Is this it for the S&P 500? Will we continue to go on a high? Biggest crash and suck a dick and all that fucking bullshit. And then the market recovers and blast. Same shit with this. Scary. Oh shit, we're back. Oh shit, and all-time high. Fuck yeah, it's time. Where do rate cuts? Psych. Same fucking play. And then the homie pointed out, in this candle bullshit, there's a thing called this M pattern. This M pattern, Bitcoin would do it a lot. I would see a lot in Bitcoin and Ethereum. So just like the head and shoulders, you got your support. Your support is way down here. Here's your first. Here's your N, right? Your N, pshum, pshum, pshum. Now we have the reversal. And then what's gonna happen is either it's gonna complete an M, or it's gonna drop 50% or less than 50% bullshit here, and then continuing off and get everybody off guard and do for the whole. That's it for the market. Or we're gonna continue this M, and again, fucking at the end of the year, the last week, these motherfuckers gonna surprise us with some stupid shit, and the market's gonna recover. But then you also gotta remember, we got earnings coming up the beginning of January. We have the banks. We're gonna start off with the banks, and all these fucking reports and credit reports and this and that. So again, we could be in a shake-off, get stuck in this sort of consolidating range, upward movement, depending how the CPI data comes out, and then also how these banks start coming up in January. So even though let's say we create a new all-time high fucking the last week of December, or something like that. This motherfucker tweets something, some bill passes, the market gets excited because of that. But then, and we hit the 7,000 fucking goal that everybody fucking sees, thinks gonna pass. You keep hearing. Well, I can see that shit. That's your goal that everybody's so focused on or whatnot. It's a key price, a key number, 7,000. So if you do go on up this month, having that so-called fucking Santa rally, what you can see, you gotta think about earnings and the banks coming up with all that shit. So even though we're fucking creating new all-time highs, we may have that fucking scary fucking earnings. Some AI fucking. We just had Broadcom. We just had what was the other fuck? I forget the one started it all. So you had those two that are starting it off, and then you're having to earnings coming up too. So once these earnings start failing, if they do, and then also what it could do is, if we're in the 7,040, all it's gonna do is gonna be testing the waters too, and people are gonna see that as a bubble pop, and then go back up. But it also depends how much down we fucking drop if we create new all-time high. But then again, that's if we create new all-time high and this and that. But if we don't have that Santa rally and we're gonna continue with this pattern, the other one that gave me that fucking the red flag was the Nasdaq, because the Nasdaq on the monthly time frame was creating a perfect 3 candle box, letting me know, like, I was seeing it and I was like, holy shit, the Nasdaq, seeing what the S&P is at right now, seeing what the Nasdaq is, we're about to fucking blow up. So if you go to the monthly, you have that perfect 3 candle box right here. The first one gives you your resistance. Second one gives you support. You break it, you box it up. I'm pretty sure there's a number for it right there, whatnot. And then you wait for a certain data that's gonna move the market. So you then I go to the week, and boxing area. Let me show you the boxing area. Box it up. This alarm is the resistance. The top one is the resistance, and the two in the middle. I'm gonna show you what they are for. The one in the middle, the top one, is just showing me where the prior weekly resistance was at, where it closed. The second one showed me where the market opened after Friday, after the government opened. And also look where the 3 monthly the monthly support is at. It's in the same area where the government closed on that Friday before the government opened. So it's a crucial, important price to stay above. That's originally what I had it for, but then I noticed how all this was telling me, hey, you don't want the market, the Nasdaq, to break below this. Otherwise, it's a big red flag. But besides that, you don't want it to break in between, or you want it to break above this price right here, 25,702.9. But you don't want it to go below 25,422.5. And you really want to stay between 25,598 to continue with this bullishness or whatnot. So let me go down to the daily and notice how in the daily here, once we get to that price, how Nasdaq's, even though it breaks, buyers come up, close it up, close it up, close it up. So all this was telling me, hey, this is your area to pay attention to. So between this and that weekly price right here, this is where the Nasdaq needs to stay to continue going with that bullishness. So once we're having this break, and then I saw how we closed on Friday right here. So it's Friday the 5th. Let's go to the S&P 500. Friday the 5th. Friday the 5th. So they're both getting ready fucking to blow up. Hurry the fuck up. And as I go to the weekly, this weekly should have been up here. Notice how originally it was up there. So as I was seeing the Nasdaq close or be at its peak right here, and then when I saw what the S&P 500 was at, watch. Friday the 5th. Friday the 5th. So the S&P was right here. So everything was showing, holy shit, there. So when the S&P fucking flies, the Nasdaq is gonna fly right right with it, and it's on a monthly 3 candle box. So it's consolidating. So all those banks, all the motherfucking hedge funds doing all the money liquidating all those fuckface, call these breaking points, traders or whatnot, it's gonna be a big fucking blow up move, whether it be up or down. That's why I like catching these 3 candle boxes. Because especially, let me show you one that happened in the monthly. Right here. And it was saying shit. It was going up. First one give you your resistance. Second one give you your support. You break it up. It normally happens when there's big data coming out. CPIs, rating cuts, all that fucking bullshit. And then, boom, it breaks up. So when I noticed there was one happening on the NASDAQ, I was like, holy shit, yo. And then seeing it was the week of the rate cuts, it was all this good news, I was like, holy shit, this is going to be your sweet breaking point. But again, once I went to the weekly and I saw that on the weekly where it closed, I was like, nah, the Nasdaq should be up here somewhere showing strength. The fact that the S&P is showing strength, but the Nasdaq went back down, I was like, something's wrong here. I'm not liking this. And once you go to your forward candle, let me see, 12-hour candle. Thursday was the data that came out with the first earnings, right? It was the first earnings, and then Wednesday was when the Fed talked, right? So, anyways, yeah, what I'm trying to say is, the Nasdaq was the first thing that gave me the red flags that something wasn't right. That week that it needed to close strong, it closed weak, and then from there it just stayed, and I wasn't liking it. And let me see if I have any boxes or whatnot. Thursday, Thursday night, Friday, fake out, go down. Another thing about Friday was that you couldn't go in. You couldn't go in. You can only go in at 6:30. So, I like how I think the data came out at 6:30. I believe data came out bad. That was your first. That was just seeing that right there. I was like, holy shit, we're about to go down, buddy. We're going down, down, but down, but down. Shut up and pull it. And then look where it was at too. It was the fact that it went at 6 a.m. Friday and went to that price, which was one of the prices that told you that it needs to stay above the Nasdaq. It rejected that, and not just that, along with my other indicators that I have and whatnot. I was telling you right here, hey buddy, if you're a day trader, this is your entry, and these are your targets. And then the thing is, this indicator, it tells you where your resistance is at for that time frame. So if you see right here, how it tells you right here, here's that resistance bar. The way this works is, once the market shoots above this and stays above this, green and red, whatever the fuck you want to call it, it's telling you, hey, this is bullish. But the moment we start breaking this, normally the thicker it is, the stronger it is. This is just weak. That's why you see this just going up and down. But once you really have, watch, see, you have these really strong, they get stronger and stronger. So the more they drop, they have cushion to stay above that. And it tells you. So anyway, normally when it drops too, it tells me, hey, where it's gonna drop, where's gonna be your next cushion. So let me see if I find a cushion. It passed the cushion. See, and that's another thing. This okay. See, this is the Nasdaq. This is the Nasdaq. Let me take my bullshit off. Oh shit. So it closed right above a 50 Fibonacci on the daily candle. All right. So, yeah, this is gonna play fucking crazy. So here's the M. We're right on the 50 Fibonacci. We're coming up with Monday's data. Monday's data isn't gonna really be that important until we get to right here. Watch. Tuesday. Most important day. It's gonna be at 6:30. This is 2 hours ahead, or 6:30 in Arizona. U.S. employment report from November delayed. High importance. Measure job creation, unemployment, wage growth. This is one of the Fed's primary decision tools. Expectations. Payrolls near or below 50K plus unemployment rising. Labor market is cooling. Bullish for gold and silver. Support Bitcoin, Ethereum. S&P may rally if rates are expected to ease. I don't go based off on this shit right here. Pretty much another thing that you gotta remember is the the fucking fuckers. The Fed said, in a way, without saying that they're gonna start printing money. even though they said they weren't. QE, they're gonna start fucking printing money, and investors, hedge funds know this shit. So you got rate cuts happening, you got money coming into the fucking system, and you see a green fucking candle go up. You as a fucking trader, investor that don't know about the fucking how this shit works, you go, oh shit, green candle, rate cuts, get into stocks, get into gold, get into Bitcoin, get into silver, gold, stocks. And then, boom, here comes earnings. What a coincidence! It drops down like crazy. Here comes the next earnings. Keeps on going with it, and then the AI bubble is back again. So we went from 2 weeks ago, being scared of the Fed not cutting interest rate from like 30, 20%, to then shooting up in a week to 85, 90%, to now fucking going down to who knows what. But another thing that the Fed said was, hey, we're not planning on cutting interest rates. And when I heard that, I was like, well, the market, oh, what the fuck? The market's going to be back to this. But it didn't, because he pretty much said we're going to start printing money. Another thing is, he said, we're not going to cut interest rate, but if we see that the labor market is doing bad, we're going to have to step in. It's the same shit you've been saying all along. You say it, he says, pause, we're gonna pause till data, we're gonna be data dependent. That's the same shit you fucking said pretty much, but without saying that, you're gonna be on data dependent. You're gonna depend on the data. Cause think about it. Imagine him saying like, "Yeah, I'm not gonna do that no more. We're not gonna cut interest rates. Yeah, and even if the labor market comes out bad, we're not gonna step in. We're gonna see what we do." No, they're gonna fucking step in and save their fucking asses. Otherwise, everything's gonna start collapsing. Blah 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 blah. So, if this is the AI bubble and shit or whatnot, take advantage of these motherfuckers, because it's gonna keep on dropping. Or again, it's gonna be that fake out. CPI is either gonna be that bad data that's gonna be good data again. It's gonna be bad data where like investors are gonna be like, oh shit, the data came out fucking bad. That means Powell's gonna step in and mention that he gonna have to cut interest rate, or he's gonna blah 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 blah. Even though he said he wasn't, but then again he did say he was. If shit got bad, so what? CPI data came out bad, and guess what, buddy? We're gonna fucking get rate cuts in January. Blah 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 blah. So that's why this daily 50 is important right here. That's what you're gonna start seeing. You're gonna start seeing the market being very volatile, getting all this fucking data, and we're gonna end. Also, we could have a 3 candle box for me here. We could have Monday come out, either drop that below that 50, which is 25,000, 25,055, and but we're not. You know how we're not? How Ethereum and Bitcoin are reacting right now. Ethereum and Bitcoin over the weekend tell you how the market is feeling, especially Saturday night to Sunday. And as you can see, the market is dropping. Another thing that it will do is it'll do a fake out. Well, it'll start off in the morning with this fake out, and if it proceeds, especially by your 1 o'clock, because we're about to break a crucial point right here. But again, we have another cushion area down here. So if we do fall, you're hearing this whole if we break below 89 or 90, it's a crucial level, and and Bitcoin could go down to 70,000 and this and that. But people are forgetting there's a cushion down here. There's a cushion down here at 82,000. That's your last hope. So when Bitcoin had this fucking rally, from fucking 73,000 to 105, it went back low to 80,000. So since it's been hovering this area right here, you've been having a bunch of fucking YouTubers, influencers telling you that Bitcoin breaks below this 80, 90,000 fucking price, whatever, that it's gonna go down to 75 and this and that. But you have this cushion right here. To me, once Bitcoin fucking starts hanging in the 82,600 range and just bouncing in this area right here, then you're gonna be able, because if Bitcoin is down by there, then the Nasdaq is gonna fucking complete that fucking M pattern, and the S&P 500 is gonna be fucking dropping by a lot because they're synchronized. Bitcoin, Ethereum, and the S&P and Nasdaq, they're synchronized. So that's why the fact that it's opening is scary, not scary. That it's opening like that, you see Friday, Saturday, and then Sunday, boom. That's what happened. That tells you how the S&P is feeling, and it's scared. We left in fucking, we dropped like crazy. If you see the Nasdaq, like I said, and the S&P where they're at, investors are worried now, especially because you're having your CNN, NBCs, all these fuckers having all these people in front with their suits and saying, yeah, AI bubble, AI bubble, AI bubble, AI bubble. Money's on the side. The smart money's on the side, just waiting for this fucking bottom to hit. Because, like I said, your CPI data is gonna be your trigger for that drop to keep on continuing, or especially if we get good data on the CPI. If we get good data on the CPI, it's gonna be good, but not get treated as great fucking news because we want bad news. We want bad news so the Fed can step in and tell us, yep, we gotta fucking step in for rate cuts. Because we remember what he said from last time. He said, hey, but if shit gets bad, I'm gonna step in and I'm gonna have to do my thing. So that's why I believe CPI is gonna be a reversal if we start, which we are gonna be fucking opening a red candle. What I mean, either in the same price or a little bit lower with S&P and the Nasdaq. Um, and Monday we're gonna most likely have or continue with that bearishness. But once again, Monday to Tuesday is gonna be it's gonna pause, especially your nighttime. 4 to 5 is gonna start rallying on up, coming into Tuesday because that important data plus your CPI data is gonna be it's gonna be like a combo. So investors are gonna be paying attention to Tuesday. So Tuesday could be our stabilizer and bring us it up, or it could be that pressure to continue with the bottom, and then CPI is gonna save us, or continue with this bottom and push and complete this fucking pressure on down. Here's the Nasdaq. Let's see where's the weekly, daily. There's the daily. Tuesday data comes out bad, or bad. We're in a fucking we're in a fucking tight area where the Fed doesn't want to print too much money because then we're gonna get fucked. But the Fed doesn't want to not cut interest rate because if we don't, then the labor market goes down. So similar, like right now, we're in a tight area where either this good news is gonna keep us down, or this bad news is gonna help us, and we're gonna take this bad news as good news because again, bad data, mommy and daddy had to step in and fix the problem. Your parents, like you just see it that way. The parents had to step in and be like, all right, this is getting out of control, you guys. We gotta do this. We're gonna have to fucking. We don't want to do this, but we have to. We gotta cut rate cuts because of bad report. Just like they did this time. They're like, hey, we're only doing this because of the bad data that we got. All right, you guys. And this is how they're gonna fucking get you. You're getting all this good news from the Fed with crypto, the government with crypto, all these bills, all this good news with crypto they're happening from the banks, from RWAs, tokenization. You keep fucking hearing BlackRock. These last 2 months till now, you keep hearing good shit about Bitcoin. But we're so fucking stuck in the numbers, especially XRP. But the numbers, it's not going up. Little do they know it has to do with fucking the big picture, the macro, data, the Fed, all that shit matters. Bitcoin is not just on its fucking own; it's manipulated. So it reacts to this shit right here, to the data. So they put you all this shit, rate cuts. We're flying, we're good up here, and then all of a sudden you get this. So all these dummies that are fucking putting money into stocks, into options, and it's gonna go up fucking a whole week of this and that, now they're fuck. Now should we hold or should we sell? And then in between this week, this is one of the ones that fucking panic and sold. are gonna now fucking it's gonna go up a little bit. It's gonna close maybe a Monday or a Tuesday up, and they go again. Oh, dude, yeah, it's gonna go up because they look and whatever influencer they see, they go on calls again, and then here comes Wednesday and Thursday CPI data, and we fucking then go back. So it's gonna be very volatile. It's gonna be very fucking volatile. I suggest you don't get in the fucking market if you don't know, because it's gonna be very fucking volatile. And then the one that was telling me that the market was gonna open bad on Sunday was XRP. Seeing how XRP, I'm gonna go to the 1 hour time frame. So here's Friday, and notice how Friday to Saturday was just going downwards compared to Ethereum. It had this neutralness to it, and then all of a sudden you have this drop. But again, this is what I told you right here, that it'll do these fake outs, and then in the morning it'll recover, sustain, it'll just stay in this region. If you fucking see Bitcoin, Ethereum because the market opens futures at 3 p.m. So if you see it by one or two rally back up to where they were right here, for example, to 3,121 or higher, and then Bitcoin goes up to 90,000 and high, then that means the market is happy. But if Bitcoin stays in this fucking low area right here, and all it does to 1 o'clock just go 289, 400, 89, 500, that's telling you that the S&P is gonna fucking open. It's scary, it's sad, it's fucking, that's what it's telling you. That's what Bitcoin's telling me. And the same thing happened with gold and silver. Gold is gonna sustain this region here, or with the Tuesday and Thursday move, as assets fall down because of the Fed not stepping in or whatever reason, because this data came out as the Fed would take as good news, then assets would fall down because no rate cuts coming in closer. The Fed stepping back is bad for us because we want those rate cuts. And then you'll see go down to 4,263, and then possibly start breaking down to 4,200. And then people are gonna start saying the whole, is the Santa rally not happening? Is gold and silver peaking? Is that it for gold and silver? No, it's not, motherfuckers. They're gonna keep on printing the fucking dollar. This fucking shit gonna keep on flying. They just what do they call it? A strategy for them to shake people off. Again, they can't come to your fucking house and tell you, hey, we want all your fucking assets. We want your gold and silver. You better give it. They can't threaten you. They can't physically harm you. So mentally, that's the only thing how they can fuck you over. Mentally is the only way for you to yourself give them your money. Here's my money. Take my money, you guys. They scare you with the boogeyman, and then, hey, actually, the market is good, because all of a sudden it recovers because we're impatient and we can't connect the dots. All right, so too much fucking for me talking, you guys. I'm gonna come back. This was supposed to be quick, but I'm gonna come back later around most likely 1 or 3 o'clock. No, because the market opens at 4 actually. It opens at 4 on Sunday. So I'll come back at 3 o'clock. Yep, I'll come back at 3 o'clock. Crypto closed at 5 p.m. The market go open at 4 p.m. So that's why around that time, the last 4 hour candle from 1 to 5. And that 4 hour candle around your 3 o'clock, that's when you guys see a lot of action. So by 1 to 3, Bitcoin and Ethereum don't push those high levels that I told you. They're still hanging there. It's just telling you that the Nasdaq and the S&P are gonna open where they're at, or a little bit lower, because they're fucking scared. And again, you also gotta remember this: Mr. Tweetman could tweet and start a war, create a war, initiate a war, or say something to make the market go up. Some fucking, hey, I'm a fucking some bullshit that he's gonna say to make the market go up. So just be aware of that too. How not just that we depend on the data, but we now have tweets And tweets can move the market. Any fucking tweet can move the market up and down nowadays. So it's another thing you gotta be aware of. Anyways, this is Brian Seacrest signing out, folks. I gotta fucking close this shit.